Sapphire Foods is the next company that we are focusing on. First quarter EBITDA came in lower due to higher other expenses. Profits were lower as well due to tax expenses versus credits and high depreciation. Sanjay Purohit is Old-Time Director and Group Chief Executive Officer at Sapphire Foods India. He's joining us right now to talk to us about those numbers and how things look ahead. Thanks very much, Sanjay. Good morning. Great to have you here. Prashant this side. Let's just start with margins, I think, which is the point of contention for many. Consolidated EBITDA margins have seen a contraction of almost 170 basis points. They've come in at about 18.6%. They were at about a little over 20% same time last year. Could you tell us what happened and how are things looking like in the second quarter, and what will they be at for the full year?
So good morning, Prashant. Nice to come on to the show. Yes, margins, while margins have seen a contraction, I think we've got to look at the entire picture. So we've consistently said that post-Diwali of 2022, we've seen a softening of consumer demand, and that has translated into lower same-store sales growth across both the brands and then also in Sri Lanka. So having said that, the KFC business has delivered a really strong financial performance. So we've grown top line at 21%. Store growth has been at 30%, and therefore we've had flat same-store sales growth. Normally, when you have flat same-store sales growth, you would see operating deleveraged kicking in, but we've still delivered one of our highest restaurant EBITDAs. Pizza Hut is where the sales trajectory has continued the way that it has over the last 3 quarters, and we've had negative sales, same-store sales growth, and therefore operating deleverage of contributing to lower restaurant margins of 9%. Last year, same quarter, we delivered close to about 14.5%, 15%. Our Sri Lanka business also, while now stable, is starting to recover, but again, restaurant margins there have been hit a bit, and we've delivered 13% restaurant margins. So if you look at the combination of the three, KFC delivering higher restaurant margins, Pizza Hut much lower, and Sri Lanka a little lower, has contributed to our consolidated EBITDA coming in at 18.8%, a little lower than last quarter.
What is the outlook then, Sanjay, from here? Will it trend at similar kind of levels?
So we're not seeing any remarkable improvement in consumer sentiment at this moment, Prashant. And hence, quarter 2, perhaps quarter 3, we will see a similar kind of trend. And then I expect that towards the end of the year and towards perhaps at the beginning of the year, we should see an improvement in sentiment. Quarter 2, in any case, is a bit of seasonality comes in, especially for KFC because of the festivals and the higher proportion of vegetarian sales. But I think in all of this, I think we've consistently said that what can we do which is within our control? And what is within our control is product innovation, higher level of advertising and marketing spends, and then improving customer, the whole customer experience. So I think on both product innovation, KFC has launched a 99 rupee range. Pizza Hut revamped its entire range. Value we are offering, which is on par with the rest of the industry, perhaps a little better. We've upped our marketing spends, especially on Pizza Hut. And in terms of customer experience, we've been rated the #1 franchisee globally by Yum.
Mr. Purohit?
Yes.
Got it. Thank you for joining us. But, just one follow-up before I move on. Has it come as a surprise to you why there's been such a steep fall in the same-store sales growth for Pizza Hut particularly? I mean, have you got to the bottom of it? Is it competitive intensity? Is it that the segment as a whole is seeing lower consumption, or is it something to do with the brand?
Yeah. So overall consumption post-Diwali last year took a serious fall. And when you correlate it to GDP fall or there's a lovely metric within GDP called private final consumption expenditure, which really tracks consumer expenditure. You'll see that fall happening. And much of our businesses are finally also dependent on discretionary spends, overall discretionary spends. So they've tracked that. Now, after December, there's not been any further reduction in, the kind of sales that Pizza Hut is delivering. Last year, the first half was outstanding for the brand. We delivered high ADS, 15%, EBITDA, restaurant EBITDA margin. So certainly we've taken a fall from there. That fall has impacted restaurant margins. Undoubtedly, competitive pressure on the pizza category is undoubtedly higher than perhaps,
So would you, sure. So would you at some point re-look at your full year guidance? I mean, you had earlier spoken about almost 23 to 25% revenue growth. Given that you're facing so much challenges, would you want to scale it down?
Yes, Sonia, we don't give year-on-year guidances because this consumer category has ups and downs. I think we give a 3-year category, a 3-year guidance. And 3-year guidance, we've said we'll double store count, we'll increase revenue by 25%, restaurant EBITDA by 30%. I think we are more or less there from a 2-3-year perspective. We will always see these sinusoidal curves when you look at the consumer business. It's not anything new for us. When you look at all the FMCG majors and have been seeing their results, it's not a pretty picture at this moment.
Okay. Well,
right. Just one very briefly, Sanjay, and maybe this is with regards to all the blocks, etc., which have been happening. Could you tell us if we should expect anything in Sapphire in the near future?
No, nothing that I'm aware of. There was, I think, one of our first investors who had invested in 2015-16, Goldman Sachs. I think they exited in last quarter, but really, I think otherwise it's quite stable.
All right, fair enough. Sanjay, great to have you with us here. Thank you for providing that clarification. Appreciate your time here on CNBC-TV18. Good luck, and we'll speak with you soon again.